Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to err. Watch him speak now, with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Yo, guys, welcome back again for a rare stream double header. That's right. We're here, we're live. We were covering the GOP House Banking Committee with Brad Garlinghouse earlier. A lot of you tuned in for that. Appreciate you all. Now we're live for the FOMC minutes update. So there is a lot going on today. This is not the big day. That's going to come in 3 weeks. But we have a big day today as well. I'm going to walk you through this. We've got about 10 minutes until we have the minutes live published. So stick with us. Make sure you're smashing the like, subscribing, joining the channel. You can check out our Discord. It's free, discord.gg/TomCrown. Links in the video description below. You know all the goodies, guys. So basically, we had a FOMC, I believe it's 2 weeks ago in July. July 30th. No, June. My bad. In June. Where we had no interest rate change. Really the big takeaways of that meeting, where there was no interest rate change. They were showing a cautious approach. However, let's go back here. We did get a dot plot summary update. And while you may not be as nerdy enough to understand the dot plot summary, the dot plot is very spicy. What we see here, each of these dots represents a vote. So you can see the dates down here. 2025. 26, 27, long run, right? Each one of these represents a vote. The horizontal lines represent a percent where they see the federal funds rate. And so it's not just Chair Powell. I know it's not just Chair Powell voting. It's a board. It's strange. But we see 7 members looking at basically no change this year. No change. That sounds bad, but 7 members is not a majority. We see 2 members looking for roughly maybe like a 25 BPS. We'll like include right here the 4%. We're currently at 4.25 to 4.5 on the federal funds rate. Instead of going through these one at a time, let's do it this way. The median vote here is for 3.9% by the end of 2025. We got this update during the FOMC last month. A lot of people still yelling about Powell, like him, hate him, whatever, doesn't really matter. But yelling about him, saying it's too slow, too late. It is what it is. But they're ignoring largely that they have not committed, but they have signaled that the median vote, and this is more than 7. Look, this is 8 plus 2 more, 10 members. Out of 19, I suppose. I didn't know it was 19. Either way. 10 members looking for 25 to 50 points of cutting this year. And what that really amounts to is 2 interest rate cuts. Now, put this in your calculation. We only have 4 more FOMCs. The next one will be in 3 weeks. It is July 30th at the very end of this month. And at this point, markets are not looking for that cut, but this is so volatile. We see these probabilities fly around towards, as we get closer to the FOMCs. At the moment, about 95% of the market not looking for a cut right now. 5% in this moment saying they're looking for a cut in July. As we get closer to the end of the year, each meeting will become more and more statistically probable that we get the cut. Here is what I think. I think we get it in September, just like last year. And we get it in September, maybe it's September, and then I think there's only one more meeting. It's November. I don't know if there's one in December. I think it'll be back to back. I think markets will rejoice, and you guys will largely forget about hating Chair Powell for the most part, I think. That's my opinion. But they've all but committed through this dot plot, and what that means is that cuts are coming. During these minutes, we're going to get the minutes here very shortly. 8 minutes now. 8 minutes till the minutes. I know. It's like the weekly. It's tongue twister. While we wait for these minutes, we'll go over a little bit more of the FOMC that we saw last month. Basically, we saw the dot plot update. We saw funds remain the same. We saw the cautious approach. We saw economic forecasts setting GDP growth at 1.4% for 2025 and inflation at 3%. Unemployment at 4.5%. And there was a little debate on the timing of rate changes. There's certainly division in the committee, and we see that here on the dot plot. So there's no... it's not unanimous. There are people, this is what makes lots of minds great instead of just one. You have people on both sides of the fence trying to be a little more hawkish, a little more dovish, and basically they vote it out and they see what the popular opinion is. No matter what happens this year, we can see farther out thanks to this dot plot, and we can see into 2026 all but one member. All but one member, whoever this guy is, get that guy out of there, see interest rates below 4%. So virtually guaranteeing cuts into 2026 if that comes. And we can see that members are all the way down at 2.5%, which would, what would that be, like a 2% cut? That'd be 200 BPS more, 250? That'd be wild. But we can see as over time, the Fed is seeing inflation come into alignment. It's going slower than they expect. They are being cautious. I have to say it. I just have to put this thought process out there. The big topic right now is tariffs. I'm not going to comment on tariffs. I don't really know. I understand tariffs. I get them. I understand how they function, but I'm not a tariff expert. But what I do understand is the Fed's caution here. Remember, we had unilateral tariffs set to go in April. Those were pushed off 90 days. That 90-day mark, I believe, was supposed to be today. The Fed was likely waiting to see data after the actual tariffs started, right? People are yelling about, okay, well, there's no inflation, nothing happened. Well, guys, we haven't seen the tariffs come in yet. I don't think that they're going to be a big of a deal as some people are forecasting. Where did my Bitcoin chart go? I don't think they're going to be as big of a deal as people think. But I don't think it makes sense to move without the data, to move before it happens. And unfortunately, or fortunately, we've moved those tariffs off, I guess, to August 1st. So the first day that we could realistically see or judge the impacts of these tariffs would be August 1st. And realistically, these things are not likely to show instantly or overnight or the next day, right? These are going to be supply chain. There's going to be kind of long-lasting effects. I think the Fed has done what the Fed has always done. It has acted in the best interest of its dual mandate. I think they continue to do that. I really don't see the partisanship that people are kind of claiming is there. I just see it kind of being cast at them, at Jerome Powell. I think he's just doing what he's doing. I think that it is not respective to a political party or an allegiance to anyone. It is just the dual mandate. There are rumors going around that Powell will be resigning. Guys, if you are really thinking that this is going to happen today, you need to have a little review of your life. Where are you hearing this from? You're hearing this from the same accounts that, first of all, said this last month. Remember, there were accounts, big accounts on Twitter. Oh, Jerome Powell is going to resign tomorrow. It's the same accounts. There is such an incentive to make engaging, just factually wrong content that deceives people. It is lying, but there's such an incentive because algorithms feed it. People are like, oh my God, this rumor, this is going to happen. This is big. It doesn't happen. Look at the sources. I try to be a source that you can trust. I do my best. I'm not always right, but look at the sources that say these things before you react to them. It's not resigning. We're stuck with Jerome Powell for the better or for the worst until May of 26. Then he won't be here, and we'll see what happens. Honestly, I don't know what the best thing is, but that is how I feel. That's what's going on. Talking about the dot plot, we got through the dot plot. Either way, all members are seeing interest rates come down into the next few years. I think that's to be expected. Fed rate monitor, went over Fed rate monitor. Let's reload. What do we got? 3 minutes, not even. We got like 2 minutes. Stables itself. All right, I think we have like a minute and a half. Let's see. 2 p.m. I think we got like a minute and a half. You're frozen. If he doesn't resign, he'll be fired. Okay, I mean, bring your opinions, guys. You don't have to agree with me. I wouldn't hold my breath. I would not hold my breath. He's not an employee of the government. I don't know, man. If you guys looked at the article, Congress was going to investigate over his testimony in Congress. It's about renovations to the Fed building. Seems kind of desperate. Either way, you hate him. He's gonna be gone in May. It's okay, guys. It's okay. He's gonna be gone. It's wild. What's up, guys? Refresh. Is the stream slowing down? I haven't gotten any sign of it. We got about a minute till these notes are in. We're going to break them down for you. We're going to digest them a little bit together. If you could, with just seconds to spare, smash that like button. Subscribe, join our family. You know the deal. Please hit that like button. Hype it up. A lot of the time, they're nothing burgers. But we do get valuable information often from the minutes. So we're going to figure it out together. Stream rugged, really? Really? Is Powell really that bad? Dave, I don't think so. I don't think so. As a Bitcoiner, I think, burn the Fed, burn the dollar. Let's reset it, right? But as a Fed chair, I think he's done a great job, personally. With the last seconds here, I think he's done not only a great job over his term, he was appointed by Trump. But not only do I think he's done a great job over his term, I think that if you go back and you look at the different presidencies that he has been the Fed chair for, I think you can argue, and I think you can make the argument that he even favored Trump. Go back and look at the interest rates versus who was in charge at the time. The changes, I think they were pretty favorable. Maybe not the most favorable. Obama's might have been a little bit more favorable, to be honest. Wait, was it Obama? No, he wasn't Fed chair then. I'm getting my timelines confused. Because he was 2016, right? I'll have to look this up. But I think they were pretty favorable. Go ahead. Go back. The minutes are live, my friends. The Federal Open Market Committee. They're always late for their streams, but their minutes are always on time. Let's go. Yeah, I can think you can argue it's favorable, but neither here nor there. Let's jump into the minutes. So, joint meeting of the FOMC Board Governors. As always, review of monetary policy tools and communications. Let's go ahead. Let's go ahead and we have to use AI for this. I could sit here and read this to you like story time. Would you like that? But for some reason, I don't think you'd like that. Let's do this. Summarize this article. Let's give that a sec. Markets largely unimpressed by today. Bitcoin hanging out at 109,000, which is now just everyday price for Bitcoin. Kind of crazy, isn't it? No, I don't need you to deep search. There we go. Summarize that article. It's kind of wild. 109,000 is just everyday price now. Quick snippet of just the first section. This is really nothing, but we'll read anyway. During the FOMC meeting, participants focused on reviewing the Federal Reserve's monetary policy framework, emphasizing the assessment of risks and uncertainties impacting monetary policy. The staff analyzed tools to measure economic uncertainty, drawing from U.S. and international experiences. They discussed robust policy strategies and risk management. My phone just vibrated. Risk management integration. Scenario analysis was highlighted as a tool to communicate risks to the public. Participants stressed that pervasive economic risks and uncertainties are critical to decision making, requiring policies that support maximum employment and price stability. This isn't in there, aka the dual mandate, across diverse scenarios. They rely on various indicators and external contacts to assess risks, especially in uncertain times. Effective communication of risks enhance transparency and policy effectiveness with preliminary discussions on improving tools like the Summary of Economic Projections, SEP, and alternative scenarios. Very spicy. Yeah, there wasn't going to be anything. That's just the opening paragraph. Let's get into a little bit more of the meat and potatoes here. I'm going to do this one paragraph at a time because I have discovered that AI is really bad when you give it lots of text. It just reads the beginning and it reads the end. It doesn't read the middle. Interesting. Summary of financial market developments from the June FOMC meeting. Expectations for monetary policy tightened slightly, Treasury yields increased modestly and reflected market adjustments for evolving economic conditions. Kind of a nothing burger. Credit spreads narrowed. I remember them saying that, indicating reduced perceived risk in corporate debt, while equity prices rose, such as the S&P, NASDAQ, etc., suggesting increased investor confidence. For example, I would agree. I think investor confidence has very much improved over the last month. You can see that in the S&P. You can see that in NASDAQ, back to all-time highs, shaking off the mix-up of, however you view them, the mix-up of trade policy changes, shrugging them off, moving back to all-time highs. De-escalation of trade tensions reduced trade concerns and contributed a more positive market sentiment. Most economic data releases were weaker than expected, except for strong May employment, which likely bolstered market opinions. Let me get this one while I keep reading. Expectations of increased government spending supported market dynamics. Yeah, that was like fresh in the FOMC, wasn't it? The big beautiful bill, which did pass, right? It isn't possible to keep up with all this stuff in the world. It's like things just go on forever, and then once they actually happen, it's like under the radar. No one notices. Yeah, for sure. Reduced their concerns about downside risks in economic growth and upside risks of inflation. Basically, the FOMC was, at least according to these notes, more dovish even than we might have thought as we experienced this live. Open market survey. Expectations aligned with these trends. Median expectations for 2025 real GDP growth and PCE inflation adjusted downward from post-April tariff announcements levels, but remained lower for growth and higher for inflation compared to March. That adds up. That slaps. Let me see. We got a lot of these pretty graphs here. Change in real GDP. Kind of a slow GDP change over the next few years on the forecast there. What do those look like? High ends, 2.5%. Unemployment rate slowly settling. These are you can see all of this if you just go to federalreserve.gov. You can see all of this stuff. Okay. The Open Market Committee survey showed the median respondents' expected federal funds rate path increased through 2026, projecting 2 25 basis point cuts in both 2025, this year, in the remaining 4 FOMCs, 2 cuts, and then 2 further cuts into 2026. That's what we were talking about at the beginning of the show. Market-based measures, including futures-based average and options-based. I don't even know what that means. But futures-based average, options-based average, future-based average, option-based model federal funds rate paths. That kind of sounds like word salad. Aligned with the survey, also shifting higher over the intermeeting period, indicating broader market agreement on a tighter near-term policy stance. Near-term policy expectations for the next few quarters reverted to levels seen in March in the FOMC meeting, suggesting a stabilization of short-term outlooks after fluctuations following April's announcements. Nominal Treasury yields increased by 15 to 20 basis points across maturities over the intermeeting period. The rise was consistent for shorter maturity yields, with upward shift in expected federal funds rate path reflecting market anticipation of sustained or slightly tighter monetary policy, which is interesting. Maybe because last FOMC was looking at the month before its data. With the updated dot plot, I would assume that the market will soon be adjusting for looser monetary policy, as we have 2 cuts not guaranteed, but virtually guaranteed this year and next year. So 4 cuts over the next, year and a quarter, year and 2 quarters. Longer maturity yields increase were partially attributed to growing fiscal concerns, as highlighted by the desk survey, where fiscal outlook was the most cited factor influencing correspondents' forecasts for the 10-year Treasury yield over the next 2 years. This suggests market sensitivity to potential fiscal expansions and deficits. The biggest thing here so far, projected the 2 rate cuts in 2025 align with the median federal funds rate projection of 3.9% for year-end 2025. Remember, we are at 4.33, 4.25 to 4.5. So that is 50 down, or 225 cuts down. As noted in the economic projections, the persistent medium and longer-term growth concerns, despite near-term stabilization, echo the FOMC's acknowledgement of persuasive economic risks and uncertainties. Sweet. Let's keep going. This is like the meat and potatoes. This is actually good stuff. Now we're getting to RRP balances and stuff. This is like actually good stuff, not just like intro. Let me get to the chat in a little bit. I know. Rate cut this month, the base Bailey. Well, we do have an FOMC July 30th. Will that be the cut? You know, to argue that you think it will is logical. To argue that you think the cut will be July 30th, I have no objection to it. You know, I think that aligns with what we've seen on the dot plot, what we've heard from the Fed. I personally don't think it's coming till September. Why? Honestly, it's just like a gut feeling, and we've been kind of looking at this for a while. I think we're both going to find out, right? But it could be. You're not wrong. It is much more likely that we cut in this FOMC meeting than it is for Jerome Powell to resign. That is true. Market implied inflation compensation for the next year decreased by 20 basis points over the intermeeting period, reducing near-term inflation expectations. Liquidity conditions for nominal Treasury securities improved as market volatility declined compared to previous intermeeting periods. Demand for Treasury securities at auctions remained robust, unaffected by April's events. I thought that the Fed ended up buying a bunch of their own securities, though, didn't they? I thought they bought like 10 billion of their own something in last month. I don't remember now. The market, an index of performing showing modest improvements to recent quarters, aligning with longer run average. A broad trade-weighted dollar index. Yep, let's pull this up. The broad trade-weighted dollar index, or the DXY, declined further, despite rising U.S. equity prices and short-term Treasury yields, as noted, obviously, by the S&P 500. The dollar's depreciation was attributed to a larger downward revision of U.S. growth outlook compared to other major economies, prompting increased currency hedging by foreign investors in U.S. assets. And maybe we can see that here in the GDP forecasts from the Fed. Maybe. I don't know if that's actually what they're going off. PC inflation. Yeah, I should have looked at these first. The Fed, in every view that they give us, the Fed sees inflation coming down over time. And they also show us that they're looking to act on it. The dollar's sensitivity to domestic economic surprises remains unchanged, and foreign holdings of U.S. assets shows stability. Unsecured overnight rates remain stable during the intermeeting period. RRP, or repo market, repurchase agreement market, rates softened compared to prior periods, including that in the May month end, due to reduced net Treasury bill issuance amid the ongoing debt limit situation, which increased repo demand. Increased attractiveness due to softer repo rates led to broadly stable RRP usage, overnight reverse repurchase agreement usage, which typically spikes at month end. Since the debt issuance suspension began in January 25, the Treasury General TGA decreased by $420 billion on RRP balances, rose by 75 billion, and reserves increased by 150. Reserves at nearly 3.5 trillion remained abundant. However, once the debt limit is resolved, rapid TGA rebuilding is expected to drain liquidity, reducing on RRP reserve balances significantly. I'm not gonna lie, guys. Some of this I'm not even like sure what like a few of these things mean that they're talking about. Since the balance sheet runoff began, aka quantitative tightening, SOMA security holdings decreased by 2.25 trillion, reaching 20% of GDP, comparable to pre-pandemic levels. The reduction primarily affected on RRP balances, with the reserves relatively stable. The June desk survey indicated that respondents expect runoff to end in February of 2026, delayed 1 month from prior expectations, with the SOMA portfolio projected at $6.2 trillion, 20% of GDP, reserves at $2.9 trillion. Yeesh. The decline in near-term inflation compensation aligns with the market's reduced upside. Again, kind of just repeating that the market does see reduced upside inflation risk. At least they're perceiving it. Dollar depreciation can be attributed to low U.S. growth expectations set out by the Fed over the next years. 1.4% for this year. Okay, that's staff review. What's the staff review got for us? We're making it. We're making it through. Let's put this in. What are you guys thinking? They can print to infinity, and they will. They'll have to turn. They will print. They will. There's no way to not print. There's no way. You know, just to take a break, take a breather from just wall of text, wall of spamming you guys here. We are covering the FOMC minutes. This is the behind closed doors kind of thoughts, opinions, logic behind the FOMC meeting last month. So far, we've gotten some pretty interesting stuff. If you missed the intro, I went over what I think is important here and what kind of we should know about this. What else? I think we should know. We're going through it. There's some stuff. What else we got here? Powell, yeah, I guess I'll reiterate. Jerome Powell's not resigning. I don't know why some big accounts are again spreading this, and I say I don't know why, but then I stop and I realize, of course I know why. It's because they get so many views and clicks, and their views and clicks are monetized and tied to their business, and so making stuff up and lying to you is good if it makes you click it and makes you view it and they make money. Where's the meeting? The meeting is not until July 30th, though. That's the next FOMC. Oh, I remember. Is Tom live? V. Neal, I'm live, baby. I'm right here. What I was going to say is, let me take a break. I was a little worried back in April when the tariff stuff came to its apex, right? We put the pause. We said, okay, we have 90 days. And I said, this is going to be good. We're going to see markets likely float up, right? But be careful at the end of that 90 days what happens. If those same things are in, if those same tariffs or the same changes still exist, well, you might see continuation of the price action before, right? It stopped with the delay. The 90-day delay was literally today, July 9th. Literally, it was today. Where are we? There you go. Right? 90-day delay. That has been moved now to August 1st. But before that was moved, I was honestly anxious about today. Going into the 4th of July weekend, I was like, all right, awesome. Price action is good. Stocks at all-time high. This is great. But I have this bad feeling about July, like after July 4th, but specifically July 9th. And that's been alleviated for now. So we're going to kick that can down the road. Things are looking good for now. But again, this just puts our sights on August 1st. What is going to happen on August 1st? Will it be delayed again? Maybe. That wouldn't be out of the question. But pay attention. If we are at all-time highs going into August 1st, be careful. Just be cautious. Just be prepared. That's all I'm saying. All right, we'll get back to it. Let me see if you guys say anything interesting in the chat. Did I open a long last night? No, I have my longs open still. I have a long open on FEMX and a long open on BYDFI. On FEMX, I have a coin margin from 103.3 thousand. That's up 30%, about a little bit over $1,000. And then on BYDFI, I have that higher leverage long open from lower. That one's sitting pretty, actually. Pico bottom 98.7, boys. That one's aging well. I did open a little bit of a short. I'd have to log into the other account to show you guys at one. What was it at? Maybe I will log in to show you. I can't remember off the top of my head. I know it's logged in on my phone. Let's see. So I don't misspeak. We're going to get back. We're almost done summarizing and going through the FOMC minutes. Just taking a little bit of breather. Going to break this up just a little bit for you. Okay, that entry price was at 1084. You can't really see it. But so it's underwater. It's underwater for now. But I'm still net long. Everybody fear. Adam is here. What's up, Adam? What's up, Pickle? Based Bailey, Sebastian. 300 likes already. Can we keep that going? Trump said he won't move it back again. I don't know. No comment. I mean, it was supposed to be today, so no comment. Meeting today. What we have today is the notes or the FOMC minutes. These are published 2 weeks after every FOMC, and these give us more behind the scenes info, factors affecting their decisions, etc. So we are just breaking into the staff review of the economic situation. Let's see if there's anything new here. Total PCE price inflation was estimated at 2.3% for the 12 months ending in May, year over year, basically. While core PCE was 2.6. Both measures were somewhat elevated, but lower than earlier in 2025. That's good news. That's hawkish, including a moderation in inflationary pressures. It's good stuff. Short-term inflation expectations based on their survey remained high. It's interesting because that kind of disagrees with a little bit of what they said before. No, I guess they're saying market expectations. It's interesting. In the notes, I believe they have said market expectations for short-term inflation to come down, and then survey-based, meaning the FOMC members' expectations for short-term inflation are still elevated. Though the recent increases have varied, and we have seen some of the members diverging, with some measures declining again slightly from May and June. Longer-term inflation expectations are stable, as they have been from market opinion and from surveyed, suggesting confidence in the Federal Reserve's ability to manage inflation over time. Yeah, they've done a good job. A good job, right? A good job. We haven't, when I say they've done a good job, I mean we haven't spiraled into hyperinflationary debt. Like, yeah. This aligns with earlier market implied inflation compensation drop of 20 points. We already knew that. Employment rates held steady, 4.2%. Those are good numbers, consistent with the prior 2 months. So it's a few readings in a row. Labor market conditions remain solid, supported by a strong May employment report. So here's something that I'm going to go off on a tangent for a second. We keep hearing that the labor market is strong. I'm just curious. Do you feel out there, Chad? Do you feel that the labor market is strong? Is it strong in your personal anecdotal experience right now? Is it strong in your friend group around you? I want you to speak for what you see and what you know. Do you feel it's strong? I'm going to put a poll. I'm curious if anyone says yes. And please, on this channel, it's one of the rare places on the internet. It's a safe space to disagree with one another. You're allowed to disagree. You're allowed to. I'm seeing no's. I didn't even, now I will, but I didn't even see one trolley, yes, it's strong. No. I don't know. It keeps saying it's strong. And so here is the fundamental flaw. And both sides, the haters and the lovers of Powell, can kind of latch onto this. Here's the fundamental flaw with the Fed and with all of this, is they are data-based and they're equation-based. They take data, they plug it into formulas, and they say, okay, that's good or bad, right? The problem, I will say, among others, is those equations themselves. Whatever they're plugging in, they're seeing unemployment at 4 point whatever percent, they're saying that's strong, that's good, blah, blah. That equation is clearly broken. It's clearly broken. Look at all the no's. We asked the chat, I don't even know how many people are in here. 2,000 people in here. Quieter. 2,000 people in here. And not even a troll said that they feel the labor market is strong. Weird. Unemployment as a statistic itself is terrible, because unemployment doesn't manage how many people are unemployed, which is what its name suggests it does. Unemployment is like a narrow window. It's like how many people have applied for unemployment benefits in the last, is it 6 months or some small window of time. So it's like only reflective of like now jobs turning over, and really not even jobs turning over, but people seeking unemployment. It's a fundamental flaw of all of this is the data they go off of, the prices and things that they look at to measure inflation, to measure employment. I would say just are kind of old, or maybe just flawed in themselves. And no, before you come after me, I don't have the answer. I don't know the perfect formula. I don't know what things they should be looking at that they aren't, like I'm not claiming that. What I'm claiming is that a lot of this is more mathematical than you would assume. And so to those numbers, I believe the Fed is true to those numbers. The problem, though, can be with the numbers themselves. How many people voted? 260 votes. 57% say no. 43% say yes, which is weird because nobody said yes in the chat. I guess people want to say yes in the poll, but not in the chat. Or maybe people just click the first option. Do people just click the first option on the poll? I don't know, man. Probably. All right, let's keep moving through. When pump song, we're actually looking pretty good here. At this point, I feel like I should just stall and wait for the corn to pump. You said yes from Texas. All right, Dylan. Fair enough. Like I said, guys, please, I'm very clear. I'm open, honest with how I feel about things. I do not care if you disagree with me. In fact, if you will come at me logically, calmly, politely, with disagreeing opinions, I love it. I welcome it. I don't want everyone to just parrot what I say. I don't want us all to have one idea. I want us to put our heads together, debate. I know. Remember when we used to debate? You guys remember when we were, I don't know, 10 years ago? Do you remember we used to like debate with everyone and it was fun? We like debate with our friends and we debate with strangers, and the debates rarely ever ended in like you being like, I can hate that person, that guy can go die. Like it never ended that way. It was like fun. And maybe those people became your friends even if you disagreed. Somehow we've lost that in the last few years. Now when you debate, it's like just mudslinging. I think a lot of opinions have been pushed too close to our chests. Is what it is. All right, let's wrap up. Staff review of economic situation. We got on a tangent there about labor force participation, labor force being strong. I am largely outside of it. That's why I want your guys' opinions. I don't know. Unemployment doesn't impact me. I'm, a guy on YouTube. But all the people in real life that I see around me have lost their jobs, have been laid off over the last year. Every single one. And these are smart, young, college educated or higher, like career guys who have never been laid off in their lives. And now every single one of them, I can't name a single person in real life that I know that hasn't been laid off in the last year. It's crazy. Some people more than one. I disagree with you. How dare you, Nicholas? I hate you. You're not invited to my birthday party. All right, let's keep looking at this data. Labor force participation rate and employment to population ratio dipped in May, stayed near 2025 early levels, indicating resilience. Non-farm payrolls grew solidly in May, slightly above the average monthly pace the 4 months prior, enforcing labor market strength. They keep saying it, man. They've always said it, and I don't know. The job vacancies to unemployment ratio remained at 1, signaling balanced labor market. Hourly wage earnings increased by 3.9% in the last 12 months. I feel like that's worthy of another. That's worthy of another poll. I have to. I know, dude. I'm gonna get stuck on this, but I'm gonna keep going. Ready? Did you personally get a 3.9% or higher raise in the last year? Yes, no. Just yes or no. There you go. Curious. Real GDP was expanding at a solid pace in the second quarter of 25, consistent with the FOMC's assessment of robust economic activity, despite weaker than expected data in some areas. This contrasts with the FOMC's 2025. That does contrast, and that's actually at odds. So the second quarter GDP growth was robust, even though we had some weaker data, but that is at odds at the 2025 projection at 1.4% GDP growth for the year. That there are some things at odds here. Mostly, though, the things at odds are kind of the market's opinion, or the market, what the market sees versus what the survey see, meaning the FOMC participants. Monetary policy stance: the decision to maintain the federal funds reflects caution amid elevated inflation potential above the 2% target. Nothing interesting there. Focusing on risks and uncertainties. Nothing interesting there. Robust labor market and GDP growth align with rising equity prices. We're certainly seeing rising equity prices, that's for sure. We could see all-time highs. Did we see all-time highs today in the S&P? Literally today? Literally today. We're coming off an all-time high on the S&P. Wow, by the way, S&P, that's crazy bullish. Can Bitcoin pull this right now, please? S&P breaks the all-time high. Now, of course, this red candle is not bullish. But here's what I'm seeing. Break to all-time high. Sellers, profit takers come in. Push price down, but look. Look at that. Clipping all-time high, setting off all those orders, sweeping into that liquidity, right? Setting off sell alerts, setting off profit taking. Can't bring it back down. Now, of course, at the end of the day, you could see that, right? Something could change. But in this moment, that is bully. You just cleared out limit orders above. You retraced. I think you're looking for more all-time highs like right now. Bitcoin could realistically see an all-time high today. It's not moving. The volatility over the last week is not making us feel that way, but it could, especially with what's going on with indices. Look at that perfect low time frame 618 retracement. Boom, right back up. Boom. Let's go. Projection alignments, conclusion. All right, there's nothing new in the conclusion there. International trade flows. Honestly, at this point, we're just burning time because the corn's looking to do something spicy here. Let's power that up. I like taking a little break in between, seeing what you guys are saying. NVIDIA is up. Is NVIDIA, dude? I've not looked at NVIDIA in a while. That might be some alpha. Tommy boy, Mr. Eth. What's Eth doing? It wasn't doing much earlier. NVIDIA all-time high. Wow. Look at that shit. Look at that. Look at that sweep of liquidity into April. Boom, V-shape. Where are we going? Where's NVIDIA going next? This is like all we were looking at back in, what was it, like June last year? Something. 200? Yeah, NVIDIA to 200. Let's go. Easy call. Easy peas. Easy cheese. Put an alert on that bad boy. $4 trillion cap. Check the alt season index. Yeah. The alt season index is right here. There's the alt season index. Interesting. We are on our third week of red dominance right now. Though arguably last week wasn't actually red. It didn't break lower, it didn't trade lower. But that has not happened since November. Interesting. I still don't think it's over yet. I don't think dominance is over. I don't think it's alt season. Not quite yet. Still got a little bit down here you can come down to. Let's say, I don't know, you break 63.75. Maybe we'll talk about it. But for now, I'm not seeing it quite yet. International trade flows, according to the FOMC minutes that were published just 30 minutes ago. We're making our way through these. It's taking a while. Waiting for the corn to do a little pumpy here. U.S. imports, particularly consumer goods, surged in Q1 in anticipation of tariff hikes. And guys, remember, I'm just reading the FOMC notes. All right, don't come at me. Don't come at me all triggered. Tariff hikes, but dropped sharply in April after the broad-based tariffs were introduced and extended, delayed, indicating end of front-loading behavior. Interesting. U.S. exports strengthened in April, providing some offset to the import decline. U.S.-China agreement, a 90-day bilateral tariff reduction agreement, in mid-May of 2025, led to rebound in trade flows as evidenced by recent indicators, suggesting partial stabilization of U.S.-China trade dynamics. Trade flows remain volatile due to significant shifts in U.S. tariff policies contributing to global economic uncertainty. Q1 25 growth, foreign economic growth accelerated in Q1, driven by increased exports to the U.S., particularly from Europe and Asia, excluding China, as countries preempted the tariff hikes. Q2 slowdown. More recent data indicate... Wait a minute. Okay, this is foreign. Remember, this is foreign GDP. I was about to say, wait a second. They just said Q2 had higher for economic activity. Q2 slowdown. More recent data indicated a slowdown in foreign economic activity in Q2, attributed to reduced U.S. imports following Q1's import bonanza, let's say, and heightened uncertainty about trade policies. This aligns with earlier noted de-escalation of trade tensions and the dollar's depreciation due to weaker U.S. growth outlooks relative to other economies. That makes sense. Imports up if dollar's down. Or exports up if dollar's down. That doesn't make sense. Many foreign central banks eased monetary policy during the intermediate period, responding to concerns about slowing economic growth and, in some cases, progress towards price stability. Central banks emphasize maintaining flexibility in their approaches due to significant risks and uncertainties. It's not just the Fed. It's global. Integration. These are all just repeats. I guess the big takeaway here for this section is international trade flows were volatile. In Q1, we saw an import surge, followed by a decline into Q2 of imports, partial rebound of the China-U.S. reduction in May. Global economic growth. So in other countries, we saw Q2 slow down while the U.S. saw Q2 accelerate. And that can maybe be attributed to less imports in Q2, more exports in Q2, giving us a better looking GDP. So staff review of the financial situation. This should be spicy. This will be spice. 420 likes. Let's go. Let's go. Interesting. Wages increased by 3.9%, says the economic data. Yet 70%, almost 500 votes in 7 minutes, 70% of us did not get a 3.9% or higher raise in the last year. Interesting. What's up, Muhammad? I see you subscribing, bro. I see you subscribing. These are good minutes. You know, often, guys, like, I'll be real with you, and I'm always trying to be real. Oftentimes, the FOMC stuff, it's a big nothing burger, oftentimes. But these minutes are not bad. These minutes actually have some interesting kind of info behind them. If you're enjoying them, make sure you smash that like button, tap the screen, give those little emojis, the little placebo button. If you could you give these little placebo buttons a little tickling for extra credit? Let me see if I can gift memberships real quick. Did they ever add them back? Let me see if I can gift memberships. Ooh, replay. Real quick. Replay. Free membership. Gifting. Send 5. Here we go. Locked and loaded. Sending them out, boys. We'll send 5 more. Remember, the more you engage with the live stream, meaning subscribe, like, comment, vote, share, the more likely you are to get those free memberships, the gifted ones. Hype it up. Okay. These are good minutes, though. I'm enjoying these. Usually I lose attention and kind of move on at some point, but these are not bad. I am trying to pick through, though, because obviously there's a lot of repetition in these. Okay. Moderate. Yeah, this is there anything new in this one? Broad equity price indexes rose significantly, supported by risk sentiment due to reduced U.S.-China trade tensions. It's kind of a repeat. Credit spreads tightened, kind of a repeat. The VIX, or market volatility, declined moderately, reflecting calmer market conditions. The Fed seems pretty happy about the U.S.-China de-escalation in these notes. That's a good takeaway. Here we go. The Israeli-Iran military conflict had minimum impact, we're talking about markets, beyond energy markets, limiting broader market disruptions. That's big too. They're definitely going to give that a thumbs up. The U.S. dollar depreciated, consistent with earlier noted declines in trade-weighted dollar index, weaker U.S. growth outlooks, bigger imports versus bigger exports. What? Short-term funding markets remain stable. There's a lot of repeat in there in this section. Overnight RRP. I think basically they're just repeating a lot of it. Secured market rates were slightly below the effective federal funds rate, likely due to Treasury bill supply and limited debt situation, aligning with softer repo rates. I do believe, though, during that FOMC, the big, beautiful bill had not been passed yet. I think it was still in the House or something, Senate. Borrowing costs for businesses, household, and municipalities generally decreased but remained elevated. Yields declined moderately in corporate bonds and leveraged loans. Small business loan interest rates fell in May. There we go. This is new stuff. Commercial-backed securities yields on higher-rated tranches were stable or slightly up. Residential mortgages, 30-year fixed-rate conforming mortgages were stable but remained high. Consumer credit card offer rates increased slightly in March and April, while auto loan rates were unchanged. It's not bad. That's good. Okay, we're going to get the staff economic outlook after this last piece. Dump, plump. Put some clothes on. You put some clothes on, Krogeless. You put some clothes on. Or take them off, baby. Do you? It's also, what? Over 95 degrees here. It's over 95 degrees here. You're lucky I'm wearing a shirt. Lucky I'm wearing a shirt, bruh. I could just be buck naked and just be wearing a little blur circle. Teeny tiny. Okay. Corporate financing, capital markets, non-bank lenders. Financing was readily accessible. Issuance slowed in April, but rebounded solidly in May and early June. Resilient demand for non-financial corporate bonds and leverage loans. Commercial and industrial loans accelerated in growth in April, but slowed in May, showing an uneven momentum. Commercial real estate loans were modest in April and May, reflecting caution in that lending sector. Household credit availability, residential mortgages. Credit remains easily available for high credit score borrowers, but conditions were tighter for low credit score borrowers. Growth in consumer loan balances at banks was robust in April and May. Strong demand and availability. Solid sectors. Credit quality was stable for large to mid-sized firms, municipalities, and most mortgage categories, supported by strong economic conditions. Credit performance remained stable in May, consistent with tight credit spreads. Areas of concern. Small business loans delinquency rates in March and April remained above pre-pandemic levels, signaling ongoing stress for small business loans. Commercial real estate delinquency rates were elevated in May, reflecting challenges to the CRE market. FHA mortgages. Serious delinquency rates in April stayed above pre-pandemic levels. That's not good. Other mortgages, delinquency rates remained near historical lows. Very contrasting. Showing relative strength. That's very contrasting. Credit cards and auto loans. We already looked at those. Student loans. Who's here still paying off student loans? I bet quite a few of us. Most of the people that can see me right now, hear me right now, or even in the future, are 25 to 45. Virtually all the people with student loans. Delinquency rates surged in Q1 after the expiration of the student loan on-ramp period, with further increases expected. While delinquent student loan borrowers have not yet shown broader debt repayment issues, potential debt collections later in 2025 could increase delinquency rates on other debt types. That is interesting. Interesting. No student loan? That's because you're a G. It's because you're a G, Jess. What's up, Andy? How you doing, brother? Legend? You're a legend. Andy Bitcoin census in the house, my friend. In the house. Never had a student loan? Well, all right. You're also not American. You're not American. You don't understand. You live debt-free and humble? Same. You'll be free of your student loans after this bull run. That's right, brother. That's right. That's literally the only reason I was able to pay off my student loans is because of Bitcoin. It's the only reason. It's the only reason. No other reason. Market dynamics. Okay. Staff economic outlook. We are reaching the end. We're reaching the end, I know. It's a shame. This has taken us 45 minutes so far, but there's a lot of it. And this is a rare, like, actual good one. Maybe the world needs some chill house. By the way, guys, I'm going to Lost Lands. Confirmed. Lock it and load it. Lock it and load it. Real GDP growth. The staff's projection for real GDP growth from 25 to 27 was revised upwards compared to May's forecast, primarily due to assumptions about effective tariff rates following trade policy announcements, obviously, and as they stated earlier, the de-escalation of U.S.-China trade tensions. The improved economic outlook aligns with the Q2 25 GDP growth, because that was accelerated versus Q1, but contrasts with the FOMC's, and this is reality, yeah, it does, but contrasts with the FOMC's more cautious median projection of 1.4%, suggesting the staff's forecast may be more optimistic than the committee's consensus. Labor market conditions remain strong. Unemployment rate was projected to rise slightly through 26, remain above the staff's neutral rate of 2.4 to 4.2% through 2027. Okay, these are just rehashing. Contrast, staff viewed uncertainty is elevated. Alternative scenario. Staff prepared multiple scenarios to account for these uncertainties. There's a lot of just rehash. Participants view on current conditions. Ooh, here's probably going to get a little spicier again. Probably going to get a little spicy again here. Come on, Bitcoin. Just do it. Need more likes. That's right, Nicholas. Tell them. Tell them. Oh, yeah, Eth. You guys were looking at Ethereum. Yeah, I got a lot going on today. You know, I'm doing my best. Where's Ethereum's? Eth is reaching. Eth is reaching. Golden cross. People faded it again. Eth with the G cross, man. July 1st, it has been only up. Yeah, it's only up 5%, but still only up. Since the golden cross. Let's go. Let's go. We need more likes. We need more likes. We need more subscribes. Eth verse man, I've been speaking too much today. Eth verse BTC back to the levels that we're seeing in June. Retesting 0.25 potentially here. Fingers crossed. I'll leave Ethereum up for a minute. That is moving. Eth is moving. Let's go. XRP was up too. What? I mean, it is. It is up. A little lower high here. I got an alert. Ethereum is the spiciest right now, though. Ethereum's like actively at a new high today, or a new daily high. Typical crypto stopped and rip. Yeah, right. Your page says 85 likes. Hit the refresh button. Make sure you hit. Make sure you hit the like button. That'll help. FBTC to 0.05 soon. Let's get over 0.25 first. 0.25 is like a major resistance. It was tested and rejected all throughout May, all throughout June. We hit a lower low. We're coming back up to it one step at a time, right? In fact, that makes it look even worse. That makes it look worse. One step at a time here. No XRP, please. Love you, boy. Thank you, Queen. Thank you, Queenie. Love you too, darling. What time's the FOMC meeting, Jonathan? So the FOMC minutes, the FOMC meeting is in 3 weeks. 3 weeks and 22 minutes from now, the FOMC meeting will begin. But these are the minutes. So these are inside kind of logic, reasoning, discussion, etc. Of the FOMC from June. And there's actually been some really good stuff so far. We're not done, but we're pretty close. Pretty close to being done with it. So let me get through this next section. SEP projections for the longer run. Participants submitted projections for real GDP growth. Represented their estimate of the new level, which would be variable. Okay. Median projection for 25 was 1.4, rising to 1.6 in 2026 and 1.8 in 2027, with a longer run estimate of 1.8. So the Fed does see GDP picking up in the Trump term. Projected at 4.5% unemployment into 25 and 26, then declining to 4.4% in 27, with a longer run estimate of 4.2. 4.2 is like, I think, their juice number. That's what they really like. PCE inflation forecasted at 3% in 25, 2.4% in 26, and 2.1% in 27. Converging, of course, converging to 2% in the longer run, because that's their target. Core PCE projected at 3.1 in 25, 2.4 in 20. That just mirrors the same as PCE inflation. Core and PCE the same. Median projection for federal funds rate. We went over this a lot, but we'll just go over it again, guys. In the last FOMC, the Fed all but committed to 2 interest rate cuts this year, in 2025, and then 2 more in 2026. And remember, after May in 26, Jerome Powell will very likely not be the Fed chair. And so maybe you're going to get more than 2, but 2 this year and 2 next year under Powell right now. That's what this dot plot showed us. It showed us this in the last meeting. The notes have backed this. The notes have agreed with this, saying basically just supporting that decision, that they're looking to do 2 more cuts in this year. And remember, there's only 4 more meetings. So each meeting, right now, each meeting has a 50% chance of having a cut. Come next month, we'll have 2 more cuts. If we don't get one in July, in the end of this month, we'll have 2 cuts with only 3 meetings ahead, right? The cuts are coming. They're coming. They're almost here. Inflation has eased significantly since its 22 peak, but remained somewhat elevated. Services price inflation recently declined, and cooling of the sector. Goods price inflation has risen, potentially linked to tariff effects. Limited recent progress in reducing core inflation was noted by some participants, highlighting persistent pressures. Geopolitical developments were flagged as an upside risk for energy prices, but didn't really play out on the broader market, which is leading to some of their dovishness. This is just a repeat. Andy trolling. Which Andy? There's so many people here. I bet a bunch of people are trolling. When's Powell speaking? In exactly 3 weeks and 9 minutes. These are the FOMC minutes, though. I know it's confusing. Minutes and minutes. I don't like that. These are the notes. The behind closed doors thoughts, reasoning, rationale behind what went down during the last FOMC. And there has been explanation. Wow. There has been explanation as to why the rate cut didn't come last month, and when they think it will come. Let's see if I put this whole thing in, what it has to say about that. Down to the second. That's right, Das Peach. Do you see me? I do see you, Alex. September cuts. That's what I'm thinking. That's what I've been saying. Balance sheet. The committee continued to reducing Federal Reserve securities holdings, meaning quantitative tightening. Portfolio down, projected to reach 6.2. Yeah, that's repeat. Real GDP growth on inflation, core PCE, federal funds rate, staff projections. Those are all repeats. This is just the same info. Same info. Dollar weak due to U.S. growth outlooks relative to other economies, but that could be changing. We had a stronger Q2. The rest of the world had a weaker Q2. Financing is still available. They addressed it. They addressed the tariffs a good amount. What I'm blown away by, though, is that so far I haven't seen them. Address like what makes sense to me about tariffs. People are yelling about how we haven't seen inflation, whatever, but the tariffs were paused. The majority of the tariffs weren't active. Remember, they started in April, and then we kicked them down the road to what was supposed to be today. And now we moved it down to August. Why would we? Why would we expect to see the impacts of something that hasn't happened yet? Right? Am I crazy? Is there something I'm missing there? But the Fed doesn't seem to be commenting on that. They just keep saying they're cautious of like future impacts, which maybe is their roundabout way of saying it. I don't know. Certainty remains elevated. The Fed, a big takeaway here is that the Fed is very happy that the Fed clearly does not like U.S. and China feuding. They've pointed out in almost every section how they have optimism around U.S. and China de-escalation. They do like it. I think Bitcoin will hit 112K today or tomorrow. It could happen today. It could happen in this hour. There's 6 minutes left in the hour. It could happen in this hour. When do I think? I don't know. I don't know, man. Your guess is as good as mine. It's coming. It's coming. All the deadline moving makes fun. What it really does is make confusion. That has been something that has marked for me this year. Uncertainty and confusion amongst everything. Yeah. It's hard. It's like there's tariffs, there's not tariffs, they're later, they're here, they're there, they're these, they're then. Like they're here, they're not. I don't know. It's hard to follow. I don't know if it's intentionally hard to follow, but I think anyone who thinks that they're 100% on top of it is probably mistaken. I don't think there's anything really new here. A big thing for them is the growth slowing into Q2 while Q1 surged, reflecting US imports and like looking at the rest of the world. That's like a big issue for them. Global sentiment between US and China. It just like keeps coming up. Okay. This is the last section that is unlikely to yield anything new. It's likely just to reiterate, but whatever. Whatever. It's been a long day. I'm really, really just trying to hold out till the core moves. Like, come on. This looks so bullish, man. Look at this shit. Bought up, sold off, holds the low, retests again. 109.3K. Retesting this support or resistance. Eating away at it. Like, look at this. What is this? This is just pounding that resistance. Weakening it over and over and over again. Buyers are coming in higher and higher. Look at this. This is crazy bullish. Like higher low, higher low, higher low, higher low. Test, 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 test. Da-da-da-da-da. I don't know why you would bet against this. I have a hedge short open, but I'm net long. I would not be net short here personally. I don't know. This is crazy bullish, and maybe it's so bullish that, like, you know, game theory, you should be short. You know, we've seen that happen many times. But I don't know from a technical stance why you would not be bullish on that. Like, literally S&P. Stock indices at all-time high today. Bitcoin showing all this strength up here. It's crazy. It's crazy. So I'm trying to hold out. The zone. What's up, Volks? How you doing, bro? Looks too good to be true. I know. Sonny, that is the only thing to consider. Sell 100% now, says Jordan. There it is. Can I explain what BTC USD QTLY0926 is? I'm guessing Lee Fox, you're looking at like an options, which is like we'll have an expiration date. Perpetuals don't have an expiration date. So when you work with options, you're like betting on a price and a date. Like this price by this date. And so 0926 would be what, like September of next year. Perpetuals are just constant. Like this is a perpetual contract. It updates perpetually. It does not have like an expiration date. It does not have a date that it executes. Put it that way. By the way, trading on BYDFI. Anybody can sign up there and use it. Great exchange partner here. Big value, by the way, guys. If you sign up with any of the links in the video description below, exchanges, tools, whatever, big value that I can offer you is if you ever have an issue with these exchanges, with these tools, with these suites, you come to me, you tell me the issue, and if the issue makes sense, I will go to bat for you. I've done this for many people in our community. I've even done it for people who haven't used my links, but I will promise you, people who use my links, say you're using an exchange that I have. If you have an issue with them, I will go to them and say, my community member is having an issue. I need you to fix this. Obviously, I'm not going to go to them if you just lose trades or something. You're just losing trades. I'm not going to go to them and say, hey, you got to fix that. But like if something is happening, where you're having issues with your funds, I don't know, let me know and I will go to bat. That's a big value, considering customer support anywhere in crypto is terrible, but I will use my influence to help you out. So check them out. BYDFI FEMX in the video description below. Good stuff. What's up, Bob Saget, the realist? Thank you, man. SPX creeping on Power Hour. Crypto Rover, Fed Chair Jerome Powell expected to resign in the coming days. I've met Crypto Rover in real life in Dubai. He's a cool dude. I like him, like hanging out with him. Only met him once. I don't want to say he's like we're friends, but I don't know. I'd say we're like friends. But like, come on, the dude's posting. That's just engagement bait. It's not happening. Where there's no sources for this. It's wild. It's wild how many big accounts operate on literally just lying to you. Literally just lying to you, making shit up because they know you're going to share it, you're going to talk about it, you're going to click it, you're going to view it. Like, it's wild to me. Algorithms push it. It's just so, I refuse to do that. I will never, ever, like, flat out lie to you guys for engagement. The problem is that engagement is directly equal to money, directly equal to monetization. It's not illegal, I guess, to lie and deceive people. And so what's the answer? What's the solution? The solution is that we as people need to identify it, we need to learn, and we need to move away from it. It's fucking nuts, though. Powell will resign if you did do markets. Markets would be in just shambles. If Jerome Powell like randomly resigned today, they'd be in shambles. It would be the craziest, I don't know, good or bad, maybe the craziest event maybe ever in markets. It would be bonkers. Dude, X is unusable. Elon Musk took over X, and you know what? I'm not even going to harp on Elon Musk, but like, he took over X, said he was going to get rid of the bots. Dude, the platform has gotten so much worse. There's 10 times as many bots. Easy. All I see, like, the majority of what I see is just wrong information, just misinformation being shared as truth. Community notes is cool. I like community notes, but it's like it just can't possibly stay on top of it. X is virtually unusable. I'll give it to you. Unless like you're a grifter. But yeah, I don't care what like influencer you're seeing Powell's resigning from. Dude, there's no source for it. There's no source. Certainly isn't Powell. And remember, do you remember last month when people said literally this exact same lie? The exact same lie. Last month, people were saying he was going to resign. It was like right into the FOMC. As he was going to like resign in the FOMC. It's wild, dude. At least on next day of real news, if you can find it. I mean, I wasn't commenting on the news. I'm commenting on how fake stuff is just jammed down your throat on X. Not saying that the real news isn't there too. I'm just saying when I open my feed, it's just like mostly lies. Just like engagement bait. You consider Powell resigning as bullish. Well, he isn't resigning, so get bearish. Welcome to your own opinion on it. But yeah, there's just nothing to substantiate it. There's no source. There's nothing. Nothing. You gotta learn to tune it out yourself. You're right, Nicholas. You just have to have that intelligence. Like people in this chat have much higher IQs than the rest of the internet as a generality. We have better filters, but we need to be on top of it. Like every time you read something crazy, you need to think, is this just someone trying to get me to engage? Just trying to get me to click it? Just trying to make money off of that? I swear my timeline's just trash, dude. It's so bad on Twitter. Craig, when you click that link, if it says there's a $200 bonus if you fund with 1K, yeah, then that's right. X is better if you filter by people you follow. That makes sense, actually. Make fun of all influencers equally. Fair. Fair. Come on, Corn. Why are you not a CAS investor? I have some CAS. I have some CASPA. Certainly not my biggest bag. I mean, it's not like my Bitcoin holding. I still have some questions. I wish I could talk to like the head, the president of CAS or whatever. Some questions about it. I've heard things over the years and I don't have like a way to verify them or not. Show us your trade, dude. Brothers, literally it's right here. Literally it's in the top right, top left. There's a trade. There's a trade. These are older. Volatility has been really low. It's like low volatility equal not a great time for trading. Is BYDY available in the UK? It should be. Can't see it. I think it's like shorter maybe. Go. Either way, we've been live for a while. This is actually the second stream of the day. We went over the FOMC minutes pretty in depth. The rest of it, like I looked at it, it was just repetition. Kind of just waiting for Bitcoin to move. It looks so bullish. So bullish. It's just like refusing to move for some reason. It's probably waiting for me to end the stream. It's like Tom Crown can't be live when we blast off. But come on, that looks so bully. Just send it. Just send it. Where do I take profit? That's why I haven't been trading much, man. Everything's taking so long. I don't even have a take profit set for these longs yet. I probably should think about it. If I wanted to make it really easy, I'll just do this. 120, 121, 121.4. Make it easy. My longs from 98. Yeah, this one is. This one is. This one's not as good. We took longs like on this channel though. Like we took these longs freaking live, bro. Like we placed these, we watched them play out. There hasn't really been opportunity. Like we saw the move down. Those were the only two opportunities to long. We hit both of them. I guess you could argue, you know, like 108, and we did actually. We did open a long at 108 here. But then I closed it at like 109.6 and I reversed it to like short. So I have that short open at 108.4. It's not very big though. It's smaller. I can pull that up. I just have to log into it. It's smaller. So net I am long. Net I am long. I got that little hedgy open though. Probably gonna let it liquidate because when it liquidates, these longs will be so up. It's just like doesn't matter. New device code. So I never log into show while I'm live. Got to be fair. It can't just have the winners open, right? It's not the way we operate. Yeah, let's see if that works. I'll pull up the losing trade too. TikTok. There you go. There you go. There's the other one. There's the loser. I like how Price interacted with that entry. This has been open though. I didn't just short the 𝐒𝐿𝐴 bottom earlier. This has been open. There you go. See ya. Gym time. Get it, Bailey. Get it, brother. That's where I was at earlier. I really want to walk away, but Bitcoin is going to move. Paul Barron? Is Paul Barron here? Someone just said, what up, Paul Barron? Where's Paul Barron? What are my recent longs? I don't have recent longs. Well, we had this recent long. Close positions. There we go. There we go. I had this recent long. It was like 106. We closed at 109, and I told you that's the one I reversed. Closed in profit. Closed in profito and reversed. There you go. That was a recent long. But I closed that one because you can't see that. Closed that one because it was the worst entry. I was like, I'll take a little profit here. There you go. The only recent long I had is closed. We got this short. That's not going great, but whatever. Whatever. All right, Corn. All right, Corn. You know, you guys rock, though. You showed up for 2 streams today. I love you guys. Show us smart money versus dumb money chart. What chart is that? Oh, Paul Barron was here just 5 minutes ago. Love that guy. Love Paul. I was on his show recently, like last month. Good dude. I don't know if you're still here, Paul. Shout out. Why am I wearing sunglasses? Why are you asking so many questions, Andy? Showing up in my yard, asking all these questions. You rock to your stream. I know, I'm a little tired. And I just banged out squats at the gym and came back. I've never looked at Trueflation token. I've looked at Trueflation, but not token. What in the hell does Chairman Powell talk in 3 weeks? All right, you know what I'm going to do? I'm going to do this. You guys, check out joincrowncrypto.com. Jump in our free Discord, discord.gg/TomCrown. Sign up with BYDFI and FEMX. Links in the video description below. No KYC. You see me trading on them all the time. My value to you is if you ever have issues with those exchanges, you use my link. I'll help you sort it out personally. I'll communicate with them. Get you sorted out. This is our second stream of the day. It might end up with 3. Bitcoin may just go to all-time highs today. I have the stream ready. It's powered up. This could happen any day. Could happen any moment. I have the stream ready to go. Maybe we'll have a 3rd stream today. We'll see. But keep your eyes peeled for it. Make sure you subscribe, enable notifications. Turn on notifications on your phone for YouTube so you can get them. You have to have them on your mobile device too. Like the stream and join us on Friday at the latest if nothing